So recently, I've been getting assigned more frequently. And if you follow my IG at Credit Spread Investing, you've seen a post on how I actually don't care about getting assigned. After watching this video, if you stress about selling options, this is going to help you become zen and stress-free. Let's think about the psychological part about why we're scared of assignment or even of an option being in the money as an option seller. It's because we're afraid of losing money. So let's just use selling puts as an example. If it gets assigned or if it's in the money, there's a couple things that might stress you out. One, if it gets assigned, we're going to buy that stock for less than what it's worth. So it's automatically a bad feeling, which then directly leads to you exiting that trade early before assignment. Or number two, if you don't have enough money to buy 100 shares of that stock, since you're selling a put, you might be forced to exit early, or you might even get margin called by the brokerage. So a lot of time you make 20 bucks once or twice, and then you lose 200 bucks on one giant loss, and it wipes out all your gains, which is why some people actually don't like selling options. Today, I'm going to show you how I avoid that mistake and how you can too. So make sure you guys like this video and subscribe so you guys can learn how to replace that full-time income by trading options and investing smartly. So why don't I actually care about getting assigned? Trading, as you all know, or will learn, is all about having that right mindset. So let's talk about how we can create having that stress-free mindset. And in order to do that, we need to get rid of our stress inducers and change how we view selling options. So let's start off with the easiest rule in the system. The first rule is that we only sell puts on stocks that we have cash to buy and calls on the stocks that we have 100 shares to sell. If you don't have the money to buy it, then you'll be stressed thinking about assignment if and when the option gets in the money. You might end up buying that option back at many times what it's worth. Let's take an example. I sold an Apple put recently at $170 strike price. The collateral hold on that is actually $17,000 because I have to buy 100 shares of that stock. If I didn't have the cash, there's really two options, right? You get emotional and you exit the trade early because you're afraid of assignment. And then it could be possible that Apple actually ends up being out of the money and you feel even worse, right? You spent money closing it out and Apple actually ended up out of the money and you would have made max profit. Or you're just sitting in the trade for as long as you can, hoping that Apple doesn't continue to drop. And if it continues to drop, then maybe your brokerage margin calls you and it closes it for you. Now, if you're more advanced, maybe you limit your downside by turning it into a credit spread by buying a long put. But still, these are all mentally exhausting. So what we'd like to do here on this channel is we like to keep it simple. If you don't have the cash to buy 100 shares of that stock, don't sell a put on it. Instead of selling a put on Apple, you can sell it on a lot of other stocks. Like another example, I sold a Redfin put recently at $6. All I needed was $600. Same thing on the call side. If you don't have 100 shares to sell, don't sell calls. So let's take another example from my trades. I sold a call on Microsoft at 400. If I didn't have 100 shares of Microsoft, I would be stressed because Microsoft is currently at 430. If you don't have 100 shares of that stock, first acquire the 100 shares of that stock and then sell calls on it. If you don't sell it. This is to keep things simple and stress-free. So let's go to rule number 2. When I sell puts, I only sell it on stocks that I want to own at a specific price point. And 2, when I sell calls, I already own 100 shares of that stock, so I'm willing to part with those shares at a specific price point. Let me walk you through why this helps you remain stress-free. I'll give you another example with a real-life trade. I was doing stock analysis, and I realized Southwest Airlines is probably a pretty good buy, in my opinion. So after all of my analysis, I decided I wanted to buy Southwest Airlines at what I deemed to be a fair price, which is $24 a share. And therefore, I went out and sold puts at $24 a share. Ticker symbol LOVE at that point in time was $27.20 a share. I sold a put out at $24 a share for a month out, expiry November 3rd. I collected $31 for that one contract. But starting from October 8th, halfway through my contract, Southwest went in the money. It dropped below $24 and stayed in the money until expiry, which I was then assigned, and I was forced to buy LOVE at $24 a share when it was at $23.70. Now, the question is, why didn't I panic and buy it back? At its bottom, LOVE hit $22.50 a share, and the option that I sold was actually worth $350. It was almost 10 times what I received for selling that put. A lot of guys may have had this experience. You see 100%, 1,000% in this case, and you start panicking because that number is huge. It would have been really easy for me to want to exit that trade at any time because I see that number and I go, oh crap, this is really bad. And it might get even worse, right? LOVE could have gone all the way down and never rebounded back to $23.70. You never know, right? So you wanted to exit in order to minimize your losses. And on the other side, if I didn't want to own 100 shares of Love, or because like we talked about earlier, I didn't have the money to own Love's 100 shares of Love, then I'm going to not want to get assigned and I'm going to buy that option back at many, many times the multiplier. Right? This is the challenge that all option sellers face because it's only when you're selling options that you can lose more than you can make. Right? I can collect $24, but I can lose $2,400. So let's just run this example through to the end. I got assigned at $24 a share. I was forced to buy 100 shares of that stock, even though Southwest was below the $24 price point. Lucky for us, Southwest Airlines went up and rebounded up to a peak of $34.83 off in March. At its peak, I was up around 40% on just the stock itself. That's not including the calls that I could have sold along the way, generating even more income, right? Southwest Airlines is now at $26.15. It's fallen back again, right? Which means that I could potentially sell more put. Even without selling the put, I would still be up $2 a share, which is around 10%. And so if I had bought the option back when it dipped at its lowest to around $22 at its bottom, I would have not only spent money to get out of a winning trade by collecting 300 and then buying it back at like 350, right? I would have lost 320 bucks. And I would have missed out on the opportunity to sell calls on it as the market, as Southwest continued its way up to 34.83. So that would have been the worst case scenario. But because I had the conviction of not being afraid of assignment, because I had the cash to cover buying 100 shares of Southwest, and two, wanting to buy Southwest at $24 a share, having this conviction by following those two rules will allow you to be okay with assignment and really help you with without buying it back and closing the option trade because of your fears of assignment. If there's one takeaway from this video, it's to use selling options as a way to acquire stocks that you want to own and sell stocks that you no longer want to own. That way you're not quote unquote trading and you're just generating really passive income by selling an option and just leaving it. And I've done this following those two very simple rules month after month for years. And I wouldn't even call it profitable, but I've been generating consistent income every month for as long as I have been doing this. And if you guys want to see how much you guys can make by selling options in this way, make sure you guys check out this video that I linked in the end screen right here. If you've enjoyed this video, make sure you guys click that like button and subscribe to the channel. I'm on a mission to show you how to escape your 9-to-5 with options trading and selling and smart investing. Until next time, make sure you guys stay safe in the market. Peace.